Traders War Room proudly presents the daily video with the best trading and investing alerts anywhere on any platform. With up-to-date stock, chart, and market news, TWR is simply your one-stop shop. Wednesday SITREP. What is up, team? Chuck with Traders War Room, and I'm back at you with another video. This is your Wednesday midweek SITREP, and man, I got a fantastic video for you. I think I like the midweek SITREPs better than the other videos because we cover what happened previous weeks, and we kind of go into what is current and how to finish out the week strong, okay? So definitely got a bunch of information, a bunch of charts, and a bunch of great things for you inside of this video. Now, I need you to do me a few favors, okay? I need you to hit that like, I need you to share, and I need you to subscribe to this channel because I want you to come along with TWR on the journey. And guys, remember to check that description tab out because I got all of those hyperlinks right there at the fingertips so that you hopefully can learn how to become a better trader. The end goal has always been and will forever be to be better prepared today than we were yesterday. And we always want to grow, learn, and share together as a team. Now, if that's good and you ready to rock it, then all I got to say to you is follow me and let's go to war together, team. Traders War Room, baby. Let's get it right now. Stay tuned at the end for TWR Hot Products and Services. Alert update. We were able to make some money on some of the swing trades. Look at this. Apple, we went short on this one, and it was a quick trade, 108 to 117. We finally closed out a Kroger. This was a long. We've been in this for a while, 105 all the way to 139, and we ended up cutting it out today at 134. And on that Apple trade, I wasn't able to alert my full exit out of the position because I had to go into a meeting and I got T-Mobile. And so, of course, my phone didn't work inside walls. But looking at the chart, you guys already know the game plan. When you saw this thing pop up like it did, you guys already knew to go ahead and take profits because we've trained together, we rock together, and you guys know how we roll. Came full out of position on Meta. We'd been swinging this for a while. This was a fantastic trade. Look at that, 109 to the peak of 180, and we went ahead and secured at 127 just in case it started its bullish push into FOMC. Had to accept defeat on NVDA. It just took off and we were too far out the money, so we weren't able to make anything. So we ended up taking a dive on this one, 35 to 10. Sometimes it happens. We try to keep them light, but eventually you will take some losers. And the idea is to go ahead and cut the losers as soon as you realize there's no potential for them to come back. But you always got to get back in the ring, and we made up that loss with this SPY trade that ended up putting us into the bank for the positive. So pretty much a washout, ticker for ticker on that particular one, and this was a fantastic trade, and a lot of people made a lot more money because they held for a little bit longer. But guys, these are just me. I have over 40 analysts and algo signals that push every day. Shiner scalping his way through the market. Look at this trade right here. SPY taking the puts, going ahead with 70 bucks profit. TLM bringing you some lunch money, going ahead, going short on Microsoft, getting a little bit of that change in your pocket. AP with an absolute banging swing trade on Walmart. For you crypto lovers, man, we ain't forgot about you. Mixed pick got you cleared, man. XRP, Dogecoin for some of you that like to go that Doge route. The Market Bishop pulling checkmate on the Qs. TWR taking a SPY 0 DTE and riding that straight to the bank. Trade Hunter taking a long position in crowd and getting some bank. And Kingmaker closing out of some swing positions for some big gains. Something for everyone, every style, and every budget. TWR is absolutely your one-stop shop. $100 to $1,000 per day is possible as a Traders War Room market warrior. So quit wasting that money that's not making money and join TWR today. All links are in the description. Hot off the press. So the big news, of course, was the Federal Reserve. They went ahead and did a pause or skip interest rates, but the focus is for 2 or more rate hikes in the near future. I'm not going to read all the information. I'll leave it here so you can pause and check it out. But basically, what happened is the market kind of got a little wobbly, with the idea that, yes, okay, great. The pause was built in. We were expecting that. But the continued rate hikes, because inflation was being kind of sticky, was not anticipated. A lot of analysts were expecting cuts, and that was pretty much assured that that is not going to happen this year and probably not even next year. So definitely more rate hikes coming, and the Federal Reserve is serious about getting that inflation under control. So the market was a little wobbly. I'm expecting we probably will push a little bit, but will eventually come down because a lot of people were expecting that the pause would go into, no more hikes, and then we would start getting into the cutting. So I think that we kind of hit a ceiling, and we'll probably start seeing a decline coming in, specifically in these overbought tech names. Here's some popular analysts on what they think is going to happen and their expert opinion on the matters at hand. So I'll leave this here so you can pause and read these. But definitely a lot of analysts have mixed, reads on what the federal was actually saying and what they mean and stuff like that. So we'll have to find out and we'll have to see. People are cueing the market as a Jekyll and Hyde kind of thing, talking about how the market kind of shrugged it off. Initially we saw a huge dramatic dump, and then the market kind of came back and climbed its ways back. But again, this is one of those typical things, we're finishing strong. I think a lot of people are trying to get their stuff on high, and then they'll go ahead and start profit taking. We may not see it tomorrow. We may not even see it this week, but sooner than later, we're probably going to see a decent decline just from people profit taking and take some bread off the table. Other news, we got a hot IPO coming out, and that's one of the things you need to start looking at for when the IPOs are coming out, specifically IPOs that are dealing with artificial intelligence or are starting to say that they're doing this artificial intelligence type of thing, because that's really the bubble that we're kind of starting to build, is this AI type of bubble. So once you start seeing the IPO market start getting hot and everyone's claiming some kind of AI associated with the IPO coming out and stuff like that, that's usually one of the warning signs that the bubble is starting to burst and that we're probably getting to the point to where we need to start being a little more cautious and stuff. So just paying attention to that, but definitely love to see the IPOs coming because they make or break some great entries and exits into trades and can get some bangers at a cheap price that can absolutely just run. And Netflix right here, man, once in a lifetime opportunity for Netflix. Netflix is queued to be one of the best stocks for future growth, as it is the king in the streaming industry and pretty much has a moat around it. So definitely a lot of analysts are long Netflix, even though it has a premium multiple, but it's a premium stock and it deserves a premium multiple in the eyes of most of the analysts. So they do have extremely high price targets on this, some into the $700, where it would have been, had we not took the dramatic dump, from those COVID highs. And, people think that it'll get back up there. So we will see how this plays out. But definitely, if you're a day trader and you liked some volatility, Netflix is a fantastic trade to trade on the daily. And so what we have right here is the double line. He's talking about stocks are exhibiting signs of mania. And what it really is coming into is because we're starting to see this cycle pattern in the marketplace where we're getting the fear of missing out type. And what you get when you get the FOMO and the mania is you get an extreme sharp melt up, right? That is usually followed by a cascading downward trending effect. Okay, so almost as sharp as it goes up, you get that downward trending. And what happens with the downward trending is sometimes you get that, like I said, that melt up. It just keeps going and going and going. And you're like, how much further can it go? And all of a sudden, it just falls off a cliff, and you go down, you recover a little bit, and then you drop again and creating new lower lows. So we'll have to pay attention to that and definitely play in the market and trend the market as it gives us. And then this was an interesting story, nothing really market related, but this university Harvard student is getting in trouble for being charged with body part selling scheme. And I just think it's interesting because, everyone's out there to try to make a buck, and you wouldn't think an Ivy League type of institution would have this type of thing. But then again, we wouldn't think like a billionaire like Epstein would do what he was doing. So if you got time, go ahead and Google this and check the story out because it's an interesting read. Like I said, not market related, but it's interesting, and I had to put it in here because I had a little laugh when I read the story. Hot trends. And here's what I'm talking about, right? So we get that news, and of course, the market summary is telling us that we're hit a bearish market, at least on the day, okay? Your leader index was the Q, and your hottest sector is technology today. Worst sector was healthcare. Your top stock was double IVI, and the worst stock was Hum. Here's a picture representation of the S&P. You can see where the money was being made and where the money was not being made. Okay, and again, look at the green ones, right? The Magnificent Seven, the big caps, were holding us down today, okay? Because largely, there's a lot of red on that table, but those big caps were keeping us afloat most of the day. Here's your top gainers. And what I like about top gainers is these give us opportunity to kind of look at some things. I'm paying attention to Nike because it's been beat up here for a while. Oracle definitely hitting new highs, so I'll probably be looking to short Oracle here pretty soon. NVDA just keeps going. I do think NVDA is prime for a cool down from the jump it's had here recently. So I'd be expecting some people to take some bread off the table on that one. And we got some other one. INTC is starting to show some popularity because of this merger thing. So definitely these are great to go ahead and pay attention. And we look for opportunities that maybe they've had too much too soon and it's time to cool down. Or we look for some consolidation and potentially breakout for continuation. Here's your biggest losers. And again, what I like about the biggest losers is I like to watch these and hopefully find the bottom so that you can play the rejection. Because a lot of times these are from knee-jerk reactions and you can get some dramatic pushes on the reversal, catching it at some support and riding it up for a few. We'll look at CVS here in a little bit. And that's a good example of a stock that just absolutely just got demolished and probably will find support here sooner than later. And we can get a nice little pop back up from support. Here's your sector rotation. And of course, as you're seeing right there, technology is leading the pack, followed by industrials. Industrials showing a little bit of strength. So paying attention to some industrial names. If you don't like single industrials, do the XLI. It's a decent ETF to play, and sometimes you can get some nice pushes, at least 1 or maybe even like 1.5%. It doesn't move like some of the other ETFs, but it definitely does move, and it can give you some great opportunities. So paying attention to some of the ETFs that are in the sectors is a good move for a little less risky plays than getting into individual stocks. Here's your heat map. Again, technology, consumer staples, biggest, energy, and healthcare, biggest losers. Large insider transactions to the buy side. And what we like about these is these give us opportunities to kind of look at some stocks that we may not have heard of. And we kind of think, I wonder why these insiders are buying this. Is it just a normal move? Are they just putting some bread in the pool of a company that they're in? Or do they know something we don't know and anticipate something that's to come? Same idea, only to the sell side. These are large insider transactions with huge sell. TTD, that's interesting. We'll have to pay attention to that one. And there's a couple other ones that interest me. LMAT and PTC. You've seen PTC a lot on the sell side. So, got me thinking, why are people trying to come out of this position, for a while? So maybe something's brewing. We'll have to look into that a little bit. Congress trades. Now, I don't usually go for the Congress trades, but I put it in here because, everyone's a little different. Congress trades could give a little indication into a direction that, potentially some type of federal movement is going into. And, when the federal gets involved and stuff and contracts are built, it's usually some big money stuff. I don't pay attention to these unless I start to see contracting and defense names specifically for, wartime efforts or national protection of the, our allies, our interests and stuff like that. Other than that, I don't really pay attention to these, but I put it in here because everyone's a little different. And if you find value of it, I hope you get it. Calls versus puts, we're about 50-50, leaning a little bit to the bear side as far as volume is concerned, but definitely we're pretty even Steven on this. I'd give this a 55-45 to the bear. Dark pool, nothing really exciting. SPY, Q, and you got the big boys in there as well. Top OI and options. I like OI because I like to pay attention to see what people are still in on what trades, okay? Once people start closing out of the trades, you can tell that either the move has been made or that they're starting to look to secure because the move isn't going to be made. When people keep the options open, that usually gives you an idea that they're potentially still expecting a dramatic shift one way or the other. top stock IV, and what we like about IV is implied volatility is what gives us those dramatic pushes either to the upside or to the downside, and we can make money going both long or short. Unusual option activity giving us some of the big boys where the big money's going. The old saying has always held true, and sometimes it doesn't work, but majority of the time it does. Follow the big money and you make the big money. So definitely we're following the money, paying attention to the money, and seeing where the money flows. These are your most active stocks. Of course, Tesla's up there. You got the SQ, the TQ. SoFi was showing some. Nikola, I don't really know why people are trying to trade Nikola. Maybe because it's trying to hold above $1 so it doesn't get delisted. I don't know. But we got the other ones, AMD, SOXL, INTC. We're paying attention to that because that one is definitely starting to push a little bit, and that gets us interested in it because it's been beat up. Most volatile stocks, of course, AVGO's in there, NVDA, of course, and you got some other ones. Netflix, we talked about that one. Now, that's a decent trade on the day as well. If you get into now the premiums are juiced, especially in derivatives, but if you can afford it, you can definitely trade that both ways, and it loves the move. It's a fantastic day trading opportunity if you got the cash to play with it. Here's your unusual volume in stocks. And again, what we like about volume, just like the unusual options, okay? Unusual volume is like, why is this thing moving, okay? Especially in the penny stocks. If we start to see the penny stocks get that boost of volume, it's like, what is going on here, okay? Is it just a short squeeze? Is it just a pump? Or is there something underlying and that's about to be pushed? Why are people starting to get into it? And sometimes you can get, you can make $1 out of 15 cents on some of these penny stocks. It's fantastic, and I love to trade the penny stocks. That's what makes them exciting. But basically, unusual volume is just something that we pay attention to because we're wondering, why is the volume shifting one way or the other? Here's your stocks that are most overbought. And overbought, we're meaning that basically on the grand scheme of things, they're over the 70 RSI on the day. And oversold, and the same thing, just like the oversold, these are below the 30 RSI, and so definitely we look for reversals off these overbought and oversold and see if we can catch some diamonds in the rough and ride some momentum shifts going both ways. Stocks I like. Okay, so here's how the chart's gonna go. Basically, you're gonna see three colors: purple, blue, and red. The purple, that's our battle zone, all right? Triggers on the high and the low that give us the idea of continuation to either our high target, which is blue, or our low target, which is red. Definitely gotta use these as trigger points and ideas because the volatility of the market can change the landscape in an instant, okay? So very cautious, head on a swivel, and be ready to attack. All right, so here's SPY, of course. We got the battle zone right there, but I am not thinking that we're going to break out too much to the upside. We keep breaking out, but we're running on fumes as far as volume is concerned, and we're starting to see a lot of long wicks to the upside. So I'm thinking, yes, could we push? Absolutely, but I'm thinking it's about time to cool down. We've been on quite a run, and I am looking for some sell-off from some downtrending pressure. The Qs, absolute tear. Same idea as SPY, just too much too quick. I'm looking for a little cool down inside of the tech area. Adobe, they've had an absolute tear. I do think that they fall on earnings. I think they run into earnings. I had a bad trade. I actually thought earnings were after hour today, so I went ahead and went on a lotto put. I'll probably end up having to sell that for a loss tomorrow, but the same thing. If I start to see the push going into earnings, I'm going to expect probably a little bit of a decrease. The reason why is they got this AI push, but they're not any AI like the NVDA and some of the other ones, okay? Their AI is more with, projects and, drawing tools and stuff like that. So I don't think that AI is as much of a money-making, generating thing for Adobe. And I think that they had a nice run, and people are going to probably take a little bit off the table because they're going to go ahead and secure some profits. So I do think we see a decline, even if they have good earnings. Now, if they have stellar earnings, fantastic earnings, yeah, we'll probably get the bump. But if we get kind of inline earnings or okay earnings, we're probably going to see the decline. Now, Lynn is interesting, okay? We potentially got a breakout out of consolidation. Now, I know we pushed up almost to 120 and then kind of retreated back, but I do think that, we've had not so much of a extreme jump, but we jumped up, we consolidated. I think we can get another leg up on this one if we get some decent news and some volume that comes in here. So I'll be looking more for a long trade on this one, but definitely we got the battle zone in case we need to go short. So we'll definitely play it by ear and utilize the battle zones for markers to make decisions on the trade direction. VTNR is trending right now, but I do think that we could see a little bit of a push to the upside, but I don't think we're going to get much juice, and I think we got another leg down on this one. So I'll be looking more for an initial push and then playing the rejection to the downside. CVS, this was that stock I was telling you about, potentially a huge knee-jerk response. I'm looking for a little bit of support down here currently where we're at to recover a little bit from this knee-jerk response. So I do think we find support, we get a little bit of a bounce. Now we could definitely go down lower, but I think we find support. I think people come into this, and I think we get a little pop from down here at the bottom. INTC is interesting, okay? Now listen, this has been absolutely destroyed, and they aim to gain from the CHIP Act and stuff like this. They got a merger going on, and you're starting to hear a little bit of buzz quietly, okay? NVDA and AMD are definitely the ones that are getting a lot of the attention, and they're utilizing their mouthpieces, and they're talking the talk, okay? INTC is kind of sitting back in the waiting room, just kind of waiting for their time to shine, and I do think that INTC is overlooked by a lot of investors. I think this is the time that might be a good opportunity to go ahead and get a position long, not necessarily a trade, maybe an option trade short term, but I do like this area for position long, dollar cost average on any dips, and I think you hold this 3 to 5 years and you'll be a nice position, a nice play, and making some money off of this one. Upcoming events. On 25 June, we got the TWR Gap Trading 101. I'm going to teach you guys how to destroy gaps to destroy the market. This is going to happen 25 June at 1 p.m. Central Standard Time. $15 gets you a seat, and everybody gets the recording. Of course, same thing like the last class. TradersWarroom.com/upcoming classes. You can sign up right there, and that link is in the description. Join the TWR Investment Club. Are you tired of trading alone, losing more than you're winning? Or are you just too busy with work, family, and life to focus and hit the market bullseye? If that's you, then join the TWR Investment Club. We trade the account for you and then pay you profit and loss distro. We run both a 30-day and a 6-month club. Next club starts 1 July 2023. Sign up opens 15 June. And the link to join the free chat where you get all the information is in the description. Quit wasting money that isn't making money. Join the team and trade with TWR Bulls. All the links are in the description. Traders War Room is your one-stop shop. Try our TWR one-to-one mentoring. Does the market have you feeling like this, or wanting to rip your hair out while you watch your account dwindle? If that's you, then Traders War Room has you covered. Our one-to-ones focus on you as a trader or investor. The Zoom session connects you with a TWR professional. Whether we're covering charts, developing a plan of attack, or being strategic and deep diving on the how, why, and execution of trade plans. TWR one-to-ones will give you the confidence to attack, conquer, destroy, and make the market bend the knee in 2023. Join TWR and bow to no one. Book your session today. The link is in the description or on the website at TradersWarroom.com. Let's go to war. Activate your 2-day trial of TWR All Access on the Discord platform. We cover it all at Traders War Room, whether you're looking for stocks, options, futures, Forex, crypto, or even sports betting, or you want real-time alerts, live trading, algo signals, or even if you just want to be part of a community of like-minded investors to grow, learn, and share together as a team. Something for everyone, every budget, and every style. Join TWR today and trade with the bulls. The market is our war zone and stocks are the battle. Join TWR and let's go to war.